What if I told you there's a stock that's not just a household name, but also a dividend juggernaut, quietly building wealth for investors for over half a century? Today, we're diving into Walmart's dividend growth story, a tale of reliability, resilience, and remarkable consistency. As one of the world's largest retailers, Walmart, WMT, has rewarded shareholders with growing dividends year after year, making it a cornerstone for income-focused investors. Whether you're new to the stock market or a seasoned investor looking to strengthen your portfolio, this guide will show you why Walmart's dividend track record is a masterclass in long-term wealth building. Let's explore how this retail giant keeps delivering for shareholders and what it means for your financial future. Picture this. Disclaimer: the content provided on Bearish to Bullish is for educational and informational purposes only. Nothing in this video or on this channel constitutes personalized financial, investment, or tax advice. All investing involves risk, including the possible loss of principal. Past performance is not indicative of future results. Before making any financial decisions, you should consult with a qualified financial advisor, accountant, or other professional to discuss your individual circumstances. You own shares of Walmart stock. Every 3 months, like clockwork, a dividend payment hits your brokerage account. But here's the magic. Those payments aren't static. They keep getting bigger, year after year. This isn't luck or a fluke. It's by design. Walmart has crafted a dividend strategy that's as dependable as its stores are ubiquitous. When I first learned about Walmart's dividend streak, I was amazed at how a company so familiar could be such a powerhouse for passive income. Let's unpack how Walmart has become a dividend growth legend and why it's worth a spot in your portfolio. The streak. Walmart's dividend track record is nothing short of extraordinary. In February 2025, the company announced its 52nd consecutive annual dividend increase, a streak that began in 1974 and has continued unbroken for over 5 decades. This places Walmart among an elite group of companies known as dividend aristocrats, firms that have raised dividends for at least 25 years, and even dividend kings, which boast 50-plus years of increases. The latest hike, approved for fiscal 2026, boosted the annual dividend by 13% from 83 cents per share to 94 cents per share. This is the largest increase in over a decade, following a 9% hike the previous year. For context, this means a shareholder with 100 shares now receives $94 annually, up from $83 the year before. That kind of consistency and growth is a rare feat in today's volatile markets, and it signals Walmart's confidence in its future. Dividend growth in context. To appreciate Walmart's dividend growth, let's put those numbers into perspective with a deeper look at its history and recent trends. Over the past 12 months, Walmart's dividend growth has averaged over 10%, driven by the 13% hike for 2026. Over the past 3 years, the company has delivered annual increases of about 4 to 5%, reflecting steady but cautious growth during a period of economic uncertainty, including inflation and supply chain challenges. Looking further back, the past 5 years show an average annual growth rate of around 3%, while the past 10 years average about 2 to 3% per year. These figures highlight Walmart's shift in recent years toward more aggressive dividend increases, with the 13% and 9% hikes signaling renewed optimism in its business model. For comparison, the broader market's dividend growth often hovers around 2 to 4% for stable companies. So Walmart's recent double-digit increases stand out. According to the real-time data in the finance card above, Walmart's stock price is currently $99.35, a significant climb from its 12-month low of $87.79 in March 2025, and a substantial leap from $68.64 in July 2024. This price appreciation, combined with growing dividends, underscores Walmart's ability to deliver both income and capital gains. For long-term investors, these trends suggest that Walmart isn't just resting on its laurels, it's actively positioning itself for future growth while rewarding shareholders. How Walmart does it. So how does Walmart maintain this impressive dividend streak through recessions, pandemics, and retail disruptions? It boils down to three pillars: steady cash flow, disciplined growth, and a balanced approach to capital allocation. Walmart generates billions in free cash flow each year thanks to its massive scale, over 10,000 stores worldwide, serving millions of customers daily. This cash flow provides the financial muscle to fund dividends, even during tough times. For example, in fiscal 2025, Walmart's revenue growth was driven by strong U.S. same-store sales and a booming e-commerce segment, which grew 21% year over year. Yet Walmart doesn't just throw money at shareholders, it invests heavily in its future. Think store remodels, supply chain automation, and its Walmart Plus subscription service, while maintaining a disciplined approach to expenses. Walmart also balances dividends with share buybacks, repurchasing billions of dollars worth of stock annually to reduce shares outstanding and boost earnings per share. This strategy supports dividend growth by increasing the value of each share over time. Unlike some companies that stretch their finances to maintain dividends, Walmart's conservative approach ensures sustainability. Its ability to navigate challenges like inflation, competition from Amazon, and changing consumer habits while still raising dividends is a testament to its operational strength and management's long-term vision. Dividend details. Let's break down the specifics of Walmart's dividend as of today. Current payout. Walmart pays an annual dividend of 94 cents per share, distributed in quarterly installments of 23 cents per share. This means if you own 1,000 shares at the current price of $99.35, per the finance card above, you'd receive $235 every 3 months or $940 annually. Yield. The dividend yield is approximately 1%, calculated as $0.9 for Konian D99.35 times 100. While this yield is modest compared to high-yield stocks, e.g. at 5 to 10%, Walmart's strength lies in its growth, not its starting yield. Payout ratio. Walmart's payout ratio is about 39%, meaning it pays out 39% of its earnings as dividends. This low ratio indicates the dividend is well covered, leaving plenty of earnings for reinvestment or weathering economic downturns. For context, a 1% yield might seem low, but consider this. If you invested $10,000 in Walmart at $99.35 per share, you'd own about 100 shares, generating $94 per year in dividends. If Walmart continues its 10% annual dividend growth, that $94 could grow to over $150 in 5 years, assuming no share price appreciation. Add in reinvestment, and the power of compounding makes the numbers even more compelling. Why it matters for investors. Walmart's dividend isn't about flashy, high yields. It's about reliability, consistency, and long-term growth. For investors seeking steady, growing income from a company that's virtually recession-proof, Walmart is a textbook dividend aristocrat. Its business model, selling everyday essentials like groceries and household goods, ensures demand even during economic slumps. The recent double-digit dividend hikes, 13% in 2025, 9% the prior year, signal management's confidence in sustained growth, driven by e-commerce expansion, global reach, and operational efficiency. Walmart's stock price, at $99.35, per the finance card above, is near its 12-month high of $99.905, reflecting strong market confidence. Yet its low payout ratio of 39% suggests room for future increases, making it a compelling choice for dividend growth investors. Whether you're building a retirement portfolio, saving for a big goal, or just want passive income, Walmart offers stability and growth potential. For example, a colleague of mine started buying Walmart shares a decade ago, reinvesting dividends along the way. Today, her annual dividend income covers her car payment, a real-world example of how Walmart's consistency pays off. Story wrap-up. Imagine buying Walmart stock 20 years ago, when its share price was around $17.82, adjusted for splits per the finance card's max data for 2003. If you'd invested $10,000 then and reinvested all dividends, you'd own significantly more shares today, and your annual dividend income would be multiples of your initial payout. thanks to Walmart's 52-year streak of increases. That's the power of dividend growth. It's not just about the money you receive today, but the snowball effect of reinvesting and watching your income grow over time. Walmart's story proves that even a boring retail stock can be a wealth-building machine if you stay patient and let compounding work its magic. Are you a dividend growth investor? What's your favorite stock for reliable long-term income? Drop your thoughts in the comments below. I'd love to hear your picks. If you found this deep dive into Walmart's dividend story helpful, hit the like button, subscribe for more insights on stocks, tech, and building wealth, and ring the bell to stay updated. Are you bullish or bearish on Walmart stock? Let us know in the comments and share why you think WMT is a buy or a pass at its current price of $99.35 per the finance card above. Sometimes the best investment opportunities are hiding in plain sight, right at your local Walmart. Thanks for watching, and let's keep growing our portfolios together.